In this presentation, we will take a look at how to generate year-end reports within QuickBooks. For more accounting information and accounting courses, visit our website at accountinginstruction.info. We're going to open up our QuickBooks 3 file, the bit more complex file, by opening up our client folder. We're going to go into the QuickBooks data files, and we'll go into the QuickBooks 3. And we will open up the QuickBooks file here. We should also have a backup if you want to restore the backup to this point in time. Here we are in the Home tab, or the Home page. We have the Open Windows open. You can open the Open Windows by going to the View drop-down and selecting the Open Windows list. We're going to go through some of the reports, and some of them will be the same as month-end reports. We just want to look at the date range, how they will be similar and different, and then take a look at some of any other reports we might need for the year end as opposed to our month end reports. So let's go to the reports up top, start with our standards by going to the company and financial, scrolling down to the balance sheet standard. Now the first thing to note is the balance sheet standard, if we have it as of the end of the year, say 12/31/19, then there's nothing different than this report than will be our month end report. So if we're in December, we're batching our month-end reports and our year-end information. Note that this report will be the same because it's as of a point in time. So we could try to have two batches, one for the month, one for the year-end, and have two balance sheet reports that'll be the same. Or we can just have one balance sheet report. It just depends how you want to group it out. Just be aware of that the year-end will match the month-end because it is as of the point in time, and the same end date is there for the end of the final month and the end of the year. Let's go to our profit and loss now. We'll go to the reports drop down, company and financial, profit and loss standard. So this report clearly we want to change. It will differ by going from 01/01/19 to 12/31/19. So now we've got a full year's worth of data. So this is going to be the normal report that we would enter into a Schedule C. This would be like the starting point of the reports that we would enter into a Schedule C. So the Schedule C being the profit and loss portion, or the income or the business income portion of a normal individual 1040 Form 1040 tax return. So that we need this, in other words, for the entire year, January through December, as opposed to just the end of December, the prior or the last month. So if we are preparing both month end and year end information, we could then have two profit and losses, one for the month of December and one for the year of January through December. The other report that's going to be useful for the accountant, and oftentimes if they're preparing financial statements or the adjusting process, this is a nice report to give them. And note that when you talk to the client, you're going to say, hey, this is a report that you probably don't need. It's kind of like a list of accounts or a chart of accounts. It might be useful to you, but all that information is on the balance sheet and income statement. However, the accountant might like this report as something they could use to then enter adjustments into if they so choose. And that's going to be under reports. It's going to be under the accounting and taxes, and a trial balance. That's the one we want. And we'll change the dates 01/01/19 to 12/31/19. And so this report's really nice because it eliminates all the subtotals. It gives all the accounts on both the balance sheet and the income statement and shows that we are in balance through the use of debits and credits. So we may not understand debits and credits, and that's why it's not useful to give to a client. It doesn't give that information, but it's actually a lot more efficient and clean of a financial statement. So if you were to give it to a tax preparer that was then going to use it in order to make adjusting entries, then this is a lot easier to use because we could just enter this into our worksheet and go from there without having to deal with all the subtotals and breakups in the information. So useful information for a year-end report, probably not something that we would give on a monthly basis. Another thing to think about at the year-end reports is the Form 1099. Do we have to issue 1099s? We can think of the Form 1099 as just a report telling basically the IRS and telling the vendor, the people that our customers, our company is buying from, has told the IRS that there has been money reported. We don't have to have any withholdings or anything like that. We're just basically saying, hey IRS, hey government, this person with this number, whether it be the business ID or the social security, we're going to name them with a number, whatever that number may be, has gotten this much money from us that is revenue that they're going to need to report in some way. So, and that's all it is. It's an information return, and we're supposed to give those, the company is supposed to give those for people that the IRS is kind of worried about that won't report their income. And that's going to be usually if they're not incorporated. So if you have someone, if you're talking about large companies, if you're talking about paying Edison or something like a large utility company or the phone company, not a problem. But smaller contractors that are not incorporated, where you pay over a certain dollar amount, which is pretty low, like $600, then you're going to have to, you're supposed to give them a 1099 at the end of the year. And we can give them a report on those individuals. So we can go through our vendors. So if we go through our vendors and we go through our vendor center here, and we look through the vendors, and we can ask our client, we could say, and we should do this probably when we set up the vendors, would be easier, and ask them, hey, are any of these people individuals that we think we're going to have to 1099 at the end of the year? They're not incorporated, and we're going to pay them over basically $600. Then we're going to need to 1099 these individuals. And so if we go through these, for example, we might say, okay, there's going to be some of these that we're going to have to 1099. Obviously not Amazon because they're a corporation. Epiphone, no. Greg's Plumbing, maybe they're not incorporated. Maybe they're a sole proprietor and a contractor. Maybe that's someone that we should be tracking to see if we need to 1099 them. So to do that, we can go into Greg's Plumbing here, and we can go into the tax settings and turn on this vendor eligible. And what that'll do is it'll basically track it'll track QuickBooks will be able to pull that vendor out separately and say, do we need to 1099 this individual and put it on a report for us? Note that if we 1099 the individual, we have to put on the 1099 their tax ID number, which is given from the IRS. It's either their social security number or it's going to be a tax ID number. And we're going to need that in order to issue the 1099. So I'm not going to put it into the system here because I'm going to say it could be something that our client could get from the particular vendor. So if we want to store that information in here, we can, or we can just give a report to our clients and they can then make the 1099s from that. So I'm going to say okay, I'm going to say no here, and then we can take a look at a report. If we set a report, we can go to vendors and payables, and then we can look at these 1099 summary and 1099 detail report. So if we open that up, change the dates 01/01/19 to 12/31/19. And note we're showing down here the only 1099 vendors. So those are only the vendors that we have a 1099 for. And then we're going to go over here and say, I'm going to say all accounts. So that'll give then our vendors here that we have checked off as 1099 vendors. Now, if we didn't go through there and check the 1099 vendors, possibly we don't know who they are because we've just been entering the information into the system as we go. We may be able to help the client out by saying, here's a report for all vendors that we have. Here's what you've given to them. Could you go through this and list any of them that may be 1099s? And the other report that would be good for this is the summary report. If we go to reports, we go to vendors and payables, and we go to the 1099 summary. Same thing, and we're going to change the dates 01/01/19 to 12/31/19. And then I'll change this to all vendors and then all accounts. So then we can go through here and say, hey, we're looking for the vendors that have been paid over a certain dollar amount, like around $600, and are not incorporated typically to qualify for those that you're going to have to write a 1099 for. And this is how much we have paid each one of them. We can give this report and basically take care of that at the end of the year so we can see who needs to have a 1099 issued to them. For more accounting information and accounting courses, visit our website at accountinginstruction.info.